How various items are measured as per Ind AS. As per Ind AS 2, inventories are valued at cost or NRV, whichever is lower. As per Ind AS 16, property, plant and equipment are initially measured at cost on day one, and subsequently property, plant and equipment is measured at cost or fair value. Next, as per Ind AS 38, intangible assets, they are initially measured at cost on day one and subsequently measured at cost or fair value. Here, fair value can be used only if it can be determined from active market. As per Ind AS 40, investment property, investment property shall be initially measured at cost on day one and subsequently it will be measured at cost only. So, in case of investment property, initially it will be measured at cost and subsequently also it will be measured at cost. In case of Ind AS 40 investment property, fair value is used only for disclosure purpose. Next, as per Ind AS 36 impairment, how to calculate impairment loss? Carrying amount less recoverable amount gives impairment loss. How to calculate recoverable amount? Value in use or fair value less cost to sale, whichever is higher, will be the recoverable amount. How to calculate value in use? Present value of future cash flows discounted with market rate gives value in use. Next, Ind AS 41 agriculture. Biological assets are valued at fair value less cost to sale. Exception is if fair value less cost to sale is not determinable, they will be valued at cost. Next, agriculture produce at the point of harvest will be valued at fair value less cost to sell. Next, as per Ind AS 102, share-based payments, equity settles. Equity settled share-based payments will be valued at fair value as on grant date. In case of cash settled, they will be valued at fair value at each year end date. Next, Ind AS 105, non-current assets held for sale. If a non-current asset has been classified as held for sale, then it will be valued at carrying amount or fair value less cost to sell, whichever is lower. From the date it is classified as held for sale, depreciation and impairment loss stops. Next, valuation or measurement as per Ind AS 103. In case of normal business combination, how to calculate goodwill or gain from bargain purchase or capital reserve. First, purchase consideration, that is shares, assets, debentures will be valued at fair value. Deferred consideration at present value. Contingent consideration at fair value. Pre-share based payments will be considered. Identifiable net assets taken over at fair value. Difference between PC and INA, that is net assets less non-controlling interest less purchase consideration gives goodwill or gain from bargain purchase. If it is negative, it is goodwill. If it is positive, it is gain from bargain purchase. It is nothing but capital reserve shown under other equity. Next, in case of common control, PC calculation, shares will be considered face value. Other items same as normal business combination. For other items, it is same as normal business combination. Deferred consideration at present value, contingent consideration at fair value, pre-share based payments will be considered. Next, identifiable net assets taken over at book value will be considered along with reserves and surplus. Difference will be capital reserve or gain from bargain purchase or goodwill. So the difference will be capital reserve in case of common control. Next, demerger. In the books of acquirer, there are two types: not under common control, under common control. Under not under common control, PC calculation is same as normal business combination. INA, identifiable net assets will be taken over at a fair value. No reserves and surplus will be taken over. Difference, goodwill or gain from bargain purchase. Gain from bargain purchase means capital reserve shown under other equity. Next, under common control, calculation of pieces. Shares will be taken over at a face value. Others will be taken over at a same as normal business combination. Identifiable net assets will be taken over at book value. No reserves and surplus will be taken over. The difference will be capital reserve. or gain from bargain purchase. So in case of common control, generally there will not be any goodwill. So in this case also, there will be the difference will be capital reserve or gain from bargain purchase. There is no goodwill. Here also under common control, there will be no goodwill. This is in the books of acquirer. Next, in the books of acquiree, in both the cases, that means not under common control cases and common control cases, the entry will be liability account debit, carrying amounts to asset account, carrying amount, difference, capital reserve. That is gain from bargain purchase. No recording inflow of PC will be there in case of acquiree books. Next. So the conclusion is in case of common control, there will not be any goodwill. Next, reverse acquisition. In case of reverse acquisition, how to calculate PC? Deemed PC will be calculated in case of reverse acquisition, which is also called as accounting PC, accounting purchase consideration or deemed purchase consideration. Next, identifiable net assets will be taken over at a fair value of accounting acquiree. Difference is goodwill or gain from bargain purchase, that is capital reserve, shown under other equity.